Okay, so today we're going to look at, let me just remove this. Yeah. Today we're going to look at support and resistance. We'll also look at trend lines. But then the way we're going to look at them is not like the way we've learned them. So let me start with support. Pay attention to the end. I'm going to throw in some of my own observations I've made over the past years. So support and resistance. We'll start with the definitions. So support, according to me, is any point the market fails to go lower. So if you have a market like this, it's trending downwards like that. Any point where the market fails to go any lower, see it reaches to there. So these points here, these become my support levels. Any point where the market had failed to go further down becomes my support. Then my resistance levels are these levels where the market had failed to go any further up. So those are my resistance levels. Then I explained in my trendline videos that support can also change into resistance. Resistance can also change into support. I won't get into that, but if you want to find out more, watch my trendline video. It explains that in detail. Okay, so with that out of the way, now what we want to do is just remove this. So what we want to do is take an example for an upwards trend. So we have this. You can see the market is moving upwards like that. So now, a quick quiz. What is this going to be? Is it a support or a resistance level in this one? And you have 5 seconds and your time is up. Okay, before I answer, pause the video and try to figure out what that is and what this will be called. So if you said this here is your resistance level, you're right, this becomes your support. Remember I said support is any level the market fails to go further down. Resistance, the market fails to go further up. You can see this market was trending upwards. When it reached this point, there was some level of resistance there, which caused this market to drop to this level. Same, right? And once it was dropping, it failed to go anywhere lower than this level and bounced back up. So that becomes my resistance. This becomes my support. Then I'll explain why these ideas I'm explaining here are very, very important on the markets shortly. So then, how do we apply this in the actual markets now that we know what support is and what resistance is by definition? So we'll say if you have a market right now, this is US oil. If you have a market like this, for most traders, it's difficult to spot the support and resistance levels by just seeing. So what you can do is you can go here where it says candles, change this to a line chart. Now everything will be clear. So from here, we can see that the market had been failing to go past this level. Failing to go past that level. So that becomes our resistance level. Then we can also draw some support level right around this area. By the way, support and resistance are not they are not like just straight lines, they're areas in the chart. So now, and by the way, I've only drawn 2 lines on purpose. I'll explain why shortly. So now, if I was to zoom in, now you get the idea of what has been happening here, right? So we've seen that once the market reaches this level, the resistance level, we expect a what? A downward push. These levels here. But when it's here, this is the support level. We expect an upwards push from the market, like that. So in case you're struggling to like kind of draw the support and resistance levels, what you have to do is you have to change the candlesticks into a line chart, like what we did here. Click that, change it to this. Once you have this, now it will be easier to like spot the levels where it has stopped. Once you're done, you go back to your candles. Now this will help you to put everything in perspective. So now, if I was to zoom out, you notice that I had said earlier, right? On the onset, I said that any level the market fails to go lower, like this one, becomes my support level. So that is my support level. This is also another support level. Then I have that also as my resistance level, just right on top. But I left these ones out on purpose because in trading there's something called analysis paralysis. Analysis paralysis. Now this means you've drawn way too many key levels on your chart to a point where you're not even following what the market is doing. You are not wrong if you draw this as a resistance level. Also, you're not wrong if you draw this. You're not wrong if you draw that. You can keep adding. There's also this one here. You also have this smaller one here. All those are valid. But then the question is, once you put a lot of indicators, sorry, not indicators necessarily, but you put a lot of key levels on your chart, it becomes very difficult for you to kind of like analyze, well, like it clusters your judgment of your analysis. Hence, you won't be able to like think clearly. Your mind will have a lot of zones that it's looking at subconscious. You might think that you're only focusing on this, but your mind will put everything you've drawn here into your brain. So that will make it very difficult for you to like figure out where the trade is going to go, because you have a lot of information, you become overwhelmed. And that is what is called analysis paralysis. You have a lot of things on your chart. So how do you avoid that? So then now we go back to the trick I was talking about earlier. So what you do is you want to remove everything. You want to remove everything that is not in line with the most recent price action. What do I mean? So what I mean is simple. It's just this. You've seen what I've drawn here, right? What I've drawn, just this and this, are showing me the most recent price action. So here I'm anticipating that this market is going to move upwards. Now, if it so happens that I'm wrong and the market breaks out of this, what then do? I draw a line there, a support zone, because I know this is where the market tends from. So there's some form of support on this level where the buyers are looking at. Hence, if I turned out to be wrong on that, I expect the market to drop all the way to this level at least. So then this level only becomes relevant if the market breaks to the downside. That's when I can draw it. Then I delete this one on top so that I keep my charts as clean as possible to avoid having a lot of analysis on my screen. So that's the reason why you always have to like draw just two support and resistance levels. Then you can combine them with trend lines as well. I'll talk about trend lines briefly also. So this is what support and resistance is. It's just the points where the market failed to go any further down, points where the market failed to go any further up. Now, these are only focused on the most recent price action. As you can see, I'm only focusing on where the market currently is. I haven't focused on these other parts behind here. Those parts are only there to help you with one thing. They help you to determine your blind spots. So what I mean by that is, if you're at the level, like let's say, you can see there's some form of a level here the market had made. Saying right. So these are called blind spots. Like previously, key levels, which are in between your most recent support. What I mean is this. This is my most recent support, which has now turned resistance. If we're going to assume that the market has dropped, let me do this. That is my support turned resistance. If we're going to assume that this market has dropped to that level. So this will now become a resistance level. That's changed from support to resistance. Now, what I was explaining is this. These other levels here, they're only used to find out your blind spot. This has become my resistance level. This down here has now become my support level.